Hi, everyone. This is Tim Melvin of the Tim Melvin Deep Value Report and the Banking on Profits newsletter, coming to you from yet another nice day down here in Central Florida. This week, I actually remembered to use my whiz bang headset gear, so we'll have a little better sound. Right, lots of noise in the marketplace this week. Interesting remarks out of Europe, and of course, Mr. Putin in Russia had some fascinating things to say about his relationship with the West and the United States in particular. Oil prices continued to tumble, and everybody's still focusing on the Black Friday and holiday shopping season. But in spite of all that noise, not a lot really happened out there, guys. And the S&P was up 0.39% for the week. Nice little gain. Nothing to get too terribly excited about. The all-world URTH index was up 0.15% for the week. And the superstar this week was, of course, the small banks with a solid 2.05% gain. Lots of noise, not a lot of real progress in either direction for the stock market this week. We had a great jobs report. Even I will admit that that was a solid report. I tend to have a skeptical eye on the jobs numbers released by the government. Much higher than anybody expected. Jobs growth, wage growth was up a little bit. Hours worked were up a touch. So pretty good report across the board. A little disturbing that the U6 is still over 6%. And we haven't seen this low labor force participation rate since Jimmy Carter was in the White House. But it was still a pretty solid report. The Beige Book came out this week, and again, showing solid pickup in economic activity pretty much across the board in all districts. Not breakout level growth that's going to take us to the next level, but steady, solid progress across the country. And more importantly, from our point of view, really great conditions almost across the board in the banking industry. We have a lot of exposure, particularly through these small regional and community banks. We love those stocks, and we like to see conditions picking up. And business lending, this is something that we've talked about a bit, particularly in the interviews with some of the bank CEOs we did on benzinga.com, that those banks that are specializing in business, commercial real estate lending, and commercial lending are really starting to see some upticks. That could be a great sign for the economy going forward. They're doing much better than those that are mortgage specific, as the mortgage market has become incredibly competitive, and there's not a lot of demand for mortgage or refinance loans at the moment. So the business oriented banks are doing a little bit better. Now, Bill Moreland over at bankregdata.com took a look this past week at the number of bank branches, and he found that 2014 so far, we've seen one of the biggest drops in the number of bank branches out there in quite some time as consolidation continues to take place. Um, Interestingly, the biggest drops were in the larger urban areas, New York's, your Philadelphia's, your Miami markets, key urban markets, mostly centered on the East Coast, although the Chicago and Indiana market also saw a steep drop, as those are very competitive, overbanked areas of the country where consolidation is almost inevitable. Now, we're probably going to see continued declines in the number of bank branches. Online and mobile banking plays a huge role in that. Even an old guy like me who's a bit of a technophobe, I do most of my banking online these days. Very little need to ever go into the branch, although I do miss getting the free coffee in the bank branches. But that's going to continue. Consolidation, I think, is going to pick up some in 2015. Right now, we have some sellers with maybe potentially unrealistic expectations of what their bank is worth. But as conditions get a little bit better, some of the regionals that need to buy growth are going to be willing to pay up a little bit more in the banking sector. So bank branches probably going to continue to decline as a result of consolidation activity. The consolidation activity is going to make us a lot of money, so we're kind of happy to see that. Now, as we go on, most of our time is not spent dealing with macro issues. I'm a horrible macro forecaster, as you guys know. Spend the bulk of my time looking for safe and cheap stocks. We're out there, we're kicking over rocks in the corners of the market. We run multiple screens every day, every week, looking for safe and cheap stocks. Of course, we're not finding a lot. We've talked about that, and ran some screens this week that just showed the pool of cheap stocks has just about disappeared. There's, maybe a dozen worldwide that fit the perfect stock screen. So getting a little hard to find safe and cheap stocks out there. But one of the things that I do every day in my search for potential winning stocks that also fit my value criteria is run through the lists at www.sec.gov. I spend an hour a day looking through the new 13D and 13G filings, and then taking those stocks and seeing if they fit into the value parameters. When a large institutional or activist investor takes a 5% or larger stake in a company, they have to file a report with the SEC. Often, we can ride their coattails and pick up some pretty good profits out of that situation. Now, of course, we also each quarter extensively dig through all the 13F filings by all the leading money managers, and particularly some of the more obscure money managers that nobody else is tracking very closely, looking for bargain opportunities that smart people are buying, giving us an indication that we might be on the right track, riding their coattails there. Now, the big guys, when the Carl Icahns or the Bill Ackmans or the George Soroses, Warren Buffetts of the world file a 13D, you're just not going to be able to get on this thing quick enough. The whole world's going to pile into those stocks. It's going to be all over the news. It'll be, flash alerts on the TV. You'll get emails about it. So it's interesting. It's intriguing. I certainly read the filings and take a look at the companies because these are very smart, successful people. But the odds are very high. I'm not going to be able to get my money in very close to where they made their large purchase of the stock. So it's informative, but not exactly useful when the big guys file. However, one of the advantages of being around for 28 years is over time you figure out that there's a lot of smaller investors that are very smart, have a great eye for value, fantastic track records, just don't necessarily have the interest in being the largest investor in the world or having a lot of press. Those of us that have been around a while know that there is very much when it comes to value. There's a cap on how much money you can run in this space. You can't run $50 billion in a deep value approach. Just doesn't work. There's only so many opportunities. Over the years, I've identified a lot of these guys, firms like Aegis Value up in the Northern Virginia area. Nobody tracks them, but they've got a great track record and a wonderful eye for safe and cheap stocks. Ran across them because they were continually popping up in the filing reports of stocks that I owned that had the safe and cheap characteristics. So we track them really closely, and I think I'm the only one in the country that actually does. Very few people have heard of a gentleman out of Fort Lauderdale by the name of Lloyd Miller. Lloyd buys, large cap stocks, 20, 30 million market cap. He's a micro cap specialist. He's been around a long time, and he has a fantastic track record for sniffing out value, undervalued little companies, often taking a 13D activist position and agitating for change. But he files, and he's a tricky guy to track because he files some activist, some pacifist positions on a 13D, and he's a large enough insider at several of these companies, he has to file his trades on a Form 4. So he's a little tricky to track. But, he's made maybe a dozen filings over the last 2 years. Those filings from the initial date through today, 7 of the 12 of them are up, but he's got several triple-digit winners in there, and overall the portfolio has crushed the market. So when I see him filing 13Ds or 13Gs, and he's filed a couple in the last month, by the way, I tend to get really interested in the stock. It's valuable information. You got a smart guy, and you've got plenty of time to get into the stock because there's not this super wide following of people dropping whatever they're doing to pile into the stock as when Mr. Icahn or Mr. Buffett takes a position in a company. So tracking those, it's like I said, it could be half an hour a day, it could be an hour a day, depending how active the world is. We track those filings incredibly closely because they're a valuable source of information. Now, when it comes to the bank side, we saw the recent study by Stern Agee that said, hey, when an activist investor has a 5% or larger position in these small banks, the outperformance from the time the activist investor buys until he sells is extraordinary. Outperforms the market by something like 28 percentage points, if memory serves. And as much as 1 out of 3 of these banks get taken over after the activist files a position, usually at a very large premium to where he acquired his stake. Nobody follows these guys. They're small. Most of Wall Street's not following PL Capital, Joseph Stilwell, Carpenter and Company, Michael Solzauer. They don't even know who these guys are. I do. I track all this very, very carefully because if I can get in close to the same price as Joe Stilwell or Lawrence Seidman is another great activist investor in the bank stock space, odds are very high that if I bought that, below my 85% or so of tangible book value and the bank's in decent shape and they're buying and pushing for change, I'm probably going to make a lot of money in this stock over the next several years. So 13D filings, 13G filings, and 13F filings are a very important part of what I do in the search for deep value and particularly undervalued community bank situations. If you're not doing it, you should be, but I'm going to give you an option because, an hour a day doesn't sound like much. And it's not if you're me and you're doing this full time, and that's your job description. But if you're out there running a business or professional practice, and you've got kids that you have to get to the, basketball games or baseball games or dance rehearsal or whatever else it is, and you want to have one of those things called a life, an hour a day on top of everything else can actually be quite a time commitment. Now, what I do in the Banking on Profit Monthly and the Bottom Decile Report, both monthly publications, I review all the 13D, 13G filings that come out, and we put those stocks in the newsletter each month so you can see where the institutional activity and activist activity is taking place and potentially identifying a significant profit opportunity. And remember, monthly is usually okay with these because we don't have the pile-on effect. Carl Icahn announces a 5% position in a stock. It's probably going to go up 5-10% that day, and all the value discount that he spotted is eliminated by add-on buying. With our smaller guys, that usually doesn't happen, so you have plenty of time to get your money in at a price close or sometimes even lower than they got their money to work, and position your portfolio some pretty large profits by riding these guys' coattails. Now, later this week, I think they told me Tuesday, we're going to have some sample issues from 2 or 3 months ago of both reports. We're going to make those available to you so you can see how you can use them to find potential winning opportunities. We track insider buying. We track the institutional activity and activists for both the bottom decile, cheapest stocks on price to book value, and the small regional and community bank stocks. I think it's a pretty valuable resource. If you're not already a subscriber, like I said, we'll have a sample issue. You can check it out, see if it fits into what you want to do. And knowing my marketing department, they're going to pick my pockets for a couple bucks and attach a discount to that as well. Okay, commercial over. All right, now, I had promised not to talk too much about books anymore, but there was a book released in the past week. I think it came out November 28th, so maybe the past week and a half. But Charles Brandis has a new book out, and it's called The Independent Investor, and he talks about his career meeting and working with Warren Buffett, how to identify value situations, why value has worked as well as it has for so long, and should continue to work just as well going into the future. Mr. Brandis is one of the last guys to have really interacted on a regular basis with Charles Brandis, certainly the last guy who learned extensively from him. So as he brings that experience into this book, you really need to read it. If you have a fledgling investor at home, I highly suggest this as a potential Christmas gift that can enrich not just their Christmas, but potentially their entire investing life. So anyway, that's available. I downloaded mine from Amazon this week. It's at the top of my to-read list. I'll have a review as soon as I'm done. I've read his other books. They've been very informative, useful, and helped me make money over the years. That's the most important test. So I do suggest that you might want to read this book. Now, I'm going to leave you this week with a cautionary tale. James Montier of GMO Asset is one of the brighter value investors over the last couple of decades. He wrote a fantastic book called Value Investing. If you've never read it, guess what you should be doing after you download Mr. Brandis's book? Downloading James Montier's book. He fantastic at cheap stocks. Has done a lot of work and coverage and study over the years, particularly on net stocks and some of the uber cheap stocks like we tend to buy. Now, he interviewed with a Swiss business magazine last week. I'm not even going to try to pronounce the name. I would just slaughter it. But he had some interesting and worrisome things to say. He said that right now we are in a central bank sponsored near bubble. And there is absolutely nowhere to hide. In his comments, he said that although we're not quite to a bubble yet, the market is. Remember, this is a very smart, successful guy, been around a long time, made a lot of money over the years for a lot of folks. He said this market is hideously expensive, and he doesn't feel like he has no need to own this market at this particular point in time. He said that. You've got to look at cash one of two ways to decide which type of investor you are and how much risk you're willing to take. You can say cash is horrible here. It's yielding next to nothing. We all know that, of course. And so I'm sitting with a 50% little greater than 50% cash position in the deep value portfolio. I'm well aware that cash is paying just about nothing right now. But do we take the approach that cash is hideous, so we must buy stocks no matter how expensive and how risky they may be at this point in time based on valuations? Or do we accept the fact that stocks are dangerously expensive, and in the past, from these levels and from this very small opportunity set, while no idea when the timing is, we have frequently seen some rather disastrous consequences from owning stocks at very inflated levels. So we just accept the fact that cash is really just another asset class and a tool. It's dry powder to put to work when lower prices finally come along. Kind of got to decide which side of that fence you fall on. And he went on to quote none other than that great investment expert, Winnie the Pooh, when he said, "Never underestimate the value of doing nothing." That's where we've been for a while, not finding a lot of cheap stocks outside of the community bank space. So we've been doing a lot of nothing, emulating the esteemed Mr. Pooh by using naps as part of our aggressive investment strategy every day. It's not a lot to do. James Montier is a smart guy. That's Montier. You should Google the article and read the entire thing, because it does point out when you've got this few value opportunities, quite often the market is in a dangerous situation, and holding cash and doing nothing's not the worst alternative of all. Anyway, I've got some NFL games coming up. I've got the Ravens against Miami this afternoon. That should be a fun football game to watch. Got the new Tom. Promise not to talk about books, but the new Tom Clancy book is pretty good, guys, and I'm going to finish that up today. So that's our plan for this Sunday afternoon. Hope you have a great one and a great week, and we'll talk to you next week. And thanks for listening.